Hello and welcome to June 1st. AIU is at 57%. Let's get started. There is AIU at 57%, $117. We're $4 short of our benchmark target that we wanted to get. Remember that AIU is a not a loss leader. This is a pure profit trade, which is also to like to show you guys that we're using your scanners and not using a loss leaders list. That you actually have a stronger potential of having making more profit because you're not focused just on a small restrictive list. Here at Alpha, Alpha has about maybe 45 lost leaders is all to work with. Okay, so let's review the exit for the Alpha on AIU. It is last bar. It is dipper low right there. We have a July expiration, June 15th. So I mean July 15th. So on June 15th, which is about 14 days away, we will be moving to last bar low. Now, there's a potential. You can barely see it, but it's there. And I'm going to zoom in a little bit closer. I want to hide the rules for a minute because I want to review them also. But look, we have the low here is 3606, 3604, and all we need is a low at 3605, and we would get a dipper low right there. So we are only 2 cents away, 2 pennies away from a dipper low, providing that the low tomorrow is at 3605 or higher. If not, we'll be come down and takes us out here at 35.95, and then the trade will be over. So that said, let's go ahead and now we have reviews. We have our journals up to date here. Do recall that this was an implied volatility of a 5 back on March 15th. So this trade is really long in the tooth. It's going almost for its full 90 days. And then that's a good jumping point off point into the new Elvis shift for the alphas. The new Elvis shift for the alphas, let's go ahead and bring those rules into the center screen and how they're going to be applied. And that is that we are going to be looking for the third ratio. So you know what? Let's go over to KR. KR did get triggered today, and it is ever so slightly in positive territory. That'll be a better example because that is where we're going with. And there is KR. And zoom in just a little bit. So here's KR. So KR, the Elvis shift is that we switched our scanner to the trending scanner. And what that means is that you can see here that the 10 EMA is uprising. So the 10 EMA is uprising, and then therefore we are getting into it. I'm also debating about the idea of using the 5 EMA. Now, why the 5 EMA? Because the 5 EMA is much more reactive in the last 5 trading days. That's what 5 stands for. But the unfortunate thing, it can be a bit erratic. And the stochastics is not an erratic strategy. It depends on 14 days. This is a 14-day stochastic, as well as the RSI and the MACD. They're all 14 days. So yeah, I think we'll just stick with the 10 EMA. That'd be good enough. All right. That said, because once we set the rules for the month, we're done. And nothing changes until we come to July 1st. So going for the month of June, we'll be using the STO scanner trending, which is the trending means the 10 EMA is in the correlating with the direction of the stochastics from the scanner. We are going to be looking for rule number 1 is we're taking profit at rule number 1 is that we're moving the stop to the EP. So our EP was 37.25. If we are not, I don't have to say if and when the price clears the entry zone, which I will call the gantry, figure like an Elon Musk SpaceX ship or a Jeff Bezos Blue Origin picture ship. And the point is that once price has cleared completely, including the wick, we move the stop to the EP. And the idea is that we're going to control our risk management even tighter. That comes from Unknown Market Wizards book, which I just finished the third pass through. And I'm now going to be starting the fourth one so I can start doing some quotes off the traders by name and their specifics, how they apply to us here. So the rule number 2, or the exit rule number 2, is going to be if price touches 41.30, we're out. And let me show you a good example of, well, not really, we don't have much time. But on Duke, it happened to me twice. Price came up, spiked through the third on another account, dropped down, spiked through the third, and came down, and now it's downtrending. Had I taken profit here on the first time it spiked through, I would have been out of that trade 2 weeks ago. Yes, over 2 weeks ago. It spiked through. So that's how we're going to do. If we spike up to that price, we're out. Of course, RRI 100, we're going last bar low, 150, last bar close. And at the end of 30 days, if we're in the trade, we go to dipper low. And at the end of 60 days, we'll go to last bar low. We're not going to the last 30 and 60 days as we did prior. We are now going to go to the first 30 and the first 60 and get out of the trades if it's not producing profit. So that's KR. So with that said, let's see. KR's notes are here, and there is the data. Cost us, we estimated 272, and it cost us 265. So right here, we're going to bring up our data. That's AOC, stands for actual option cost, 2.65. Okay, and now we're set. We're set for the month of June. We have our Elvis Shift. We have our rules written out, and now let's go ahead and play the game. So the next thing we're going to do is we're going to run the scanner. Yes, and there is Stochastic Uptrend Alpha. Let's run the scanner and see if anything approaches for today. And the answer is yes, SLB. SLB is in for a call. So we will be going to SLB, and let's go look at that. Let's peek at that chart real quick. And there it is. There's our situation. And let's confirm that anytime you build a scanner, well, you got to really confirm to see if that the elements are correct. Look, stochastics went up, reinforced by RSI, histogram gone green, the ATR is $1.06, and there is the 10 EMA right there. There's our 10 EMA. This is our confirmation, and our setup will be from the high of the candle to the low of this, the dipper low right there. There's the dipper low. This dipper lows will be our stop. So we're going to be looking at a $2 spread right here. Okay, let's go on now to, and then we still have to qualify this trade. It still has to go through the options qualification, and that is the next phase after finding opportunity. Now we'll go on to our stochastic downtrend for alpha, and run it. And there are no candidates for the downside. So we'll be focusing on here. So now let's go ahead and bring up our, we also have our, forgot to mention, we also have a IBD. Oh, where are you quickly? We have an IBD, man, you see, this is the thing when you have way too much stuff in your, and you got a house clean. Okay, so our IBD culprit for the week is this guy, FRAAX. They're at 15%, and year to date they're at 2.5. Look at right there, 2.5. 2.5. Let me zoom in a little closer. There it is. That is our culprit for the week. 2.5, and we are at 19.9, and their 10-year average is 15. So with that said, we'll conclude today's report for losers become winners. And oopsie, over here. And there it is right there. And we are going to conclude for today's report. And I thank you very much for stopping by and checking it out.